ETFs have become so popular here in Australia that I barely ever meet an investor who doesn't own at least one ETF. And as my unique position as the founder of a portfolio tracker, I see thousands of Australians buying and selling ETFs, the majority of which are making some pretty big mistakes at tax time. Today we're going to go through 3 of the big mistakes that I see. If you're making any of these and fix them up, you're going to be good to go. Number 1 is the AMIT statements. So when you own an ETF, you get distributions, kind of like dividends from those ETFs. Throughout the year, they pay you an amount of money that you get in your bank account from that distribution. The trick is, at the end of financial year, your ETF provider, like Vanguard or BetaShares for example, will send you what's called an AMIT statement. Now, these statements are boring as hell. I've read through a whole heap of them, a bunch of numbers that look pretty boring and honestly are pretty boring. But these numbers are actually critically important to how you file your tax return. So when you look at the numbers on these things, we're looking at things like franking credits, unfranked amount, foreign investment tax, and things like cost-based adjustments. There's a whole heap of numbers on these things that are important to you, and you need to be filing these correctly at tax time. The big mistake I'm seeing with these are investors simply ignoring these statements and just filing their tax return with the raw amount that they received in their bank account. This is a huge mistake, and it means you're filing your tax return incorrectly. Mistake number 2 involves 2 of the line items on this AMIT statement, and that's the cost-based increase and cost-based reduction. So what a lot of investors don't understand when they own ETFs, you might have been buying this ETF for, say, the last 10 years, and every year maybe you get 2 distributions. So up until now you've received 20 distributions from this ETF. Each one of those distributions often comes with a cost-based adjustment. And what that means is you need to take that adjustment and apply it to all the shares that you own. So every year when you get new distributions, it's retrospectively updating the cost base of your ETF holding. Now, I see a lot of investors who don't understand this and aren't applying those numbers across their shares. So come time to sell some of that ETF or sell all of that ETF, they're calculating the capital gain or loss incorrectly. This is probably one of the most common mistakes I see with ETFs, and it's a pretty big one. Now, I've made an entire video on exactly how you calculate these adjustments and how you apply them, so check that out after this one. Now, the third big mistake involves the previous 2, and it's keeping records. Now, keeping records, again, sounds super boring, but it is very important to be doing it. So let's say you filed your tax return for this year and you watch this video and you realize, oh damn, I've owned this ETF for 10 years. I need to go back and make the cost-based adjustments to the last 10 years worth of distributions. That's going to involve you getting the AMIT statement for every financial year for the last 10 years and applying those cost-based adjustments in order from the first one all the way through until now. Now that's fine, you might have all the AMIT statements and you might be able to do that. You file your tax return, good to go. The problem is, if you didn't keep records of what all those adjustments were and you just kind of binned it or had it in some spreadsheet that you end up throwing away, fast forward to next year when you need to do your tax, you have to do that all over again, this time for 11 years worth, and then the following year again for 12 years worth. So you can see how not keeping records gives you a huge burden of work every year at tax time. The other problem with not keeping records is if the ATO ever questions your tax return, you need to be able to prove exactly how you arrived at the numbers that you did. And if you don't have records, then you can't prove how you did it. Especially if they come inquiring about a tax return, say 5 years ago. Are you going to have that data on hand to be able to present that to them? No. So you need to keep records. And there's a couple of easy ways to do that. The first one is the old spreadsheet. If you're good in Excel and you think you're pretty confident with recording all of your trades, recording all of the AMIT statement variables, recording all of the cost-based adjustments across all of your shares, and also recording all the capital gains tax strategies that you used over that period of time, then a spreadsheet is perfect, and some people are going to be really happy with that. If you're like me and you don't have time or you cannot be bothered dealing with that disaster, you can use a tool like Navexa. Navexa is the product I built, which is a portfolio tracker and tax reporting platform, and it allows Australian investors to record all their trades, record all of their AMIT statements, and it will automatically do all of the cost-based adjustments for you. So over the next several years, as you do more investing, you may be dollar cost averaging into that ETF. Maybe you're getting more distributions that have more cost-based adjustments, which you absolutely will. It'll always all be there in Navexa, and with one click you can run a tax report and you don't have to worry about any of that boring stuff. Just to recap, the 3 big mistakes. Mistake number 1, not taking notice of the AMIT statements and not filing them in your tax return correctly. Step number 2 is the AMIT cost-based adjustments. And that's probably the biggest one that I see people doing, and that's not actually applying the cost-based adjustments to their historical shares. And 3, investors who are not keeping records. That's a big mistake and can get you in quite a bit of trouble if the ATO come a knocking. If you're an investor who already handles those 3 things, then good job. You're off to the races, and you're probably in the top 5% of investors that I've seen in Australia who invest in ETFs. So if you like this video, remember to give it a like. That helps tickle the algorithm for us. Remember to subscribe to the channel if you like this kind of content. Every week we'll be releasing how-to videos and informative videos around portfolio management and tax reporting and performance tracking. So on that note, I'll see you in the next video.